Thank you very much for staying with TV3. This is still Midday Live on TV3 and our special coverage of the State of the Nation address delivered by President Mahama in the last few minutes. And we're looking now at issues regarding the economy and the business. So the President said that his administration stabilized or managed to stabilize the economy during his tenure. So let's listen exactly to what he said, then we'll put it under the microscope.
An economy that was running a high deficit with increasing inflation and interest rates. It was also characterized by a rapidly depreciating currency. This unstable macroeconomic environment created an unfavorable investment environment both for indigenous and foreign capital. Our forum at Senchi was an attempt to forge a consensus for a homegrown fiscal consolidation program. Mr. Speaker, the Senchi outcome eventually became the basis for the IMF extended credit facility that we are implementing. The ECF program, as it's called, has resulted in an improved macro environment, which has seen a steady decline in inflation and interest rates. A new public debt management strategy is also seeing a steady decline in the public sector debt, estimated to have dropped from nearly 75% to below 65% currently. Our currency, the cedi, has also this year enjoyed relative stability, depreciating at just above 4% this year. While the deficit target for this year might be missed on account of inability to meet revenue targets, it is important for us to continue to pursue fiscal consolidation in the third and final year of the IMF program.
All right, so President Mahama also indicated that they had issues meeting their revenue targets because of some global issues concerning, for instance, gold and oil and all of that. We have been joined in studio by someone who can help us put what the President has been saying in better perspective and going forward, what can the NPP incoming do about it? We've been joined by Patrick Stevenson. Thank you very much for joining us.
Thank you very much for having me.
Good to have you. He's the development and economic policy analyst and founder and also an economic consultant at Afri Invest LLC. He's also worked with Imani Ghana, Imani Center for Policy and Education as well. Good afternoon again. To start with, the current economy that we have under President John Dramani Mahama has had several challenges.
Right.
Based on what he said in Parliament, saying that they've been able to stabilize the economy, is that your reading? Really, do you think our economy is stabilized enough for the incoming government to just take off with it?
Well, stability can be measured by a series of indicators. I mean, there are a whole lot of things that you can look at when he talks about stability. But we have to put stability that he's defined in a certain context. If you look at the way the economy, the structure of the economy today, compared to what it looked like in 2012, 2013, and 2014, clearly things look a bit better than you would have seen in those years. Ostensibly driven by challenges you had in the power sector, you had a lot of external economic imbalances regarding our balance of payments. We took a toll on the currency. I remember in 2013, I mean, the record suggests that the currency at the time was the dollar was exchanging for about 1.81 to the cedi. Now we're doing in excess of 4. And so if you compare the developments we saw in those years, the post-2012 years, to what we have seen in the just past fiscal year, which is 2016, clearly there appears to be some level of stability.
Some level?
Some level of stability.
Sizable, big enough, or still, I mean, percentage-wise, what would you put it?
Well, I haven't done anything quantitatively on that, but I mean, if we have to look at the aggregates, the general macroeconomic aggregates that we know of, clearly it wouldn't suggest that something significant has happened. Of course, you are not seeing a level of deterioration like you saw in 2013 and 2014. Right. And that, I think he equally reckons by making reference to some initiatives they took, i.e. the Senchi Forum, which led us to go into the International Monetary Fund, and some other, homegrown strategies that they are put in place.
like the dollar. You know, when the Bank of Ghana also mentioned issues regarding how much forex can be taken out of a bank and then out of the country. But let's look at one last thing, which has to do with the IMF deal.
Right.
And how that impacted on the current administration's fiscal policies and running of the economy. How has that, has it helped, and how much help do you think it has brought to the economy?
So to look at the deal, I mean, we have to appreciate why we had to go to the fund in the first place. I mean, post-2012, we saw a certain level of expenditure within the public sector that, if you ask me, was quite high. And so that had all these ancillary negatives to it. And so by 2013, we were hitting rock bottoms. And I think at the time we ascribed, instead of looking at the problem, we ascribed it to the protracted delay in the Supreme Court, which didn't allow us to put in the right fiscal policy initiatives that we needed. But we have always known as a country that the management of the public purse, i.e. what we spend our money on, has always been a challenge. Juxtaposing that to what we are able to raise. And so following 2012, these challenges became magnified. You saw deficits on the primary balances of government going up. You saw the balance of payments as well equally going up. And so we approached the IMF. Now, when we were going to the fund, we had certain objectives in mind. One was to gain a certain policy credibility, because we had exited a certain framework that provided us, if you like, cheap funds from multilateral development institutions. So we now wanted to go to the capital market. I would say, hey, look, we have issues. And so if you can support us with certain frameworks that we can implement that gives us that policy credibility, then we can go to the capital markets. The capital markets can give us resources at very, low costs. But having done that and having implemented the program, well, all the issuance we have seen for raising money on the international capital markets, I don't suppose that we got them at very cheap funds. And so we have implemented some of the reforms, but we haven't gotten the appropriate gains. Yes,
that we were expected.
That we were expecting, in my view. We haven't gotten these appropriate. Yes, you've seen minimal reductions, for example, in possible leakages that we've seen in the public sector. You've seen reduction in, say, the budget deficit that the president equally makes reference to. But on the whole, in terms of policy credibility and how investors outside are looking at the economy at the moment, I don't suppose we've had that objective we had when we were going to the fund.
We'll have to leave it here for now. Certainly, in the coming days, a lot more analysis will be thrown on with regard to what the president has said about the economy. But thank you very much, Patrick Stevenson. He is a development, finance and economic policy analyst and the founder and economic consultant at AfriInvest LLC. Thank you very much for joining us.
Thank you very much for having me.
We hope to see you a lot more in the studio. This is still Midday Live on TV3.